Welcome back to Emirates 24/7. Now, Dubai has recently announced a spate of major development worth billions of dirhams, as the city hopes to capitalize on its growing tourism sector, which is expanding at 13% a year. But PricewaterhouseCoopers' recent report into the region's project market raises concerns over the progress of projects currently underway, with the majority of respondents reporting significant delays. So, is now really the right time for all these new projects? Well, earlier, Katie and I spoke with Charles Lloyd, a partner and leader of capital projects and infrastructure at PwC Middle East. We began by asking him why project spending is expected to soar next year.
I think it's a number of things. First of all, I agree with you. I think it is a very positive finding from this survey. I don't think cost is really a factor in this. I mean, if you look at the global projects market, the Middle East is very lucky in that it's spending more on projects at a time where the market is depressed in Northern Europe, it's depressed in North America, and it's even coming down a bit in China and other parts of Asia. So I think what this is telling us is that we're seeing more projects getting going in the Middle East across a broader range of sectors. Some of those will be bigger projects, you're absolutely right, but many of them won't be. They'll just be smaller projects, governments deciding to spend more on their basic infrastructure for their nations. So not really a cost factor, just the number of projects and sometimes the number of big projects.
We certainly are seeing a lot of expansion right across the region. Interestingly though, looking at your survey, it seemed like the overwhelming majority of people had seen some kind of delay in their current projects. Now close to half said these delays had been at least 6 months or more. We're also seeing projects scaled back, some of them even cancelled due to financing issues. And it sounds like this is something that's going to continue in the new year as well.
I think so. I mean, you're right to point to delays. So delays with projects are a problem around the world. But 80% of projects being delayed, which is the finding in our report, is a little bit higher than the global average. So that, I think, is a factor that's of concern across the region and something that policymakers, I expect, will be wanting to focus on.
I mean, I guess looking at this context with the 80% in terms of the delays, we have seen a lot of big announcements recently in terms of projects from Dubai in particular, the Mohammed bin Rashid mega city, the new cultural district, the Business Bay Canal project, all these big announcements. Considering the scale of these pronouncements, with obviously these delays still going on, do you think it's the right time for this many big announcements all at the same time? Is it really, I guess, a safe decision?
Great question. I think from a strategic point of view, it's probably almost exactly the right time for Dubai to be making these announcements and planning these things for the future. So the economy is growing, the tourism market is doing very well, the retail market is doing very well. Dubai's had a fantastic Arab Spring. I think you're right, though, to look at financing as an issue here because it's clear that Dubai has had some financing problems in the past, and the financing environment is quite challenging. So the international banks who put money into many of the projects across the region have pulled back. They've tended to have gone back to their country, back to France or Germany or Britain, wherever they came from, and that's where they're focusing now. And the Dubai banks and indeed the Middle Eastern banks as a whole, apart from perhaps Saudi, have finite balance sheets. So, I think Dubai is going to have to be imaginative in the way it finances these projects. But there are plenty of things it could look at. It could look at joint ventures, it could look at export credit agency financing. I just think it's going to have to do it a slightly different way to the way it did it last time around.
Absolutely. That's not a bad thing either. I want to go back to what you were just saying, Dubai having a fantastic Arab Spring. What do you mean by that? Obviously, we have seen a number of sectors benefit here when there's been unrest in other parts of the region.
What I mean by that is if you're a corporate, a firm like PricewaterhouseCoopers, and you're looking at somewhere to set up your Middle Eastern headquarters, you want somewhere that you think is stable, that has great infrastructure, that has great flight connections, that has good accommodation, good schools, and Dubai ticks all of those boxes. So I think, there are other countries that tick those boxes as well, but I think, compared to many of those, Dubai has shown that it can go through a period of turmoil in the region and come out still looking very attractive to corporates, professional services outfits, things of that sort.
And what you were saying about joint ventures there, we are seeing a big trend of that. A lot of people in the survey, the majority actually, said they expect their current project to be some way or another helped along by the private sector. We are seeing an increase in these public-private partnerships. Why are we seeing that increase now?
I think it's a range of reasons across the region here. So you've got, towards the north in Levant and in North Africa, you've got countries who, to be honest, they need to look to the private sector for finance because they don't have their own sources of wealth. When you look at other parts of the region, so Saudi, Kuwait, Abu Dhabi, they do have wealth, but sometimes they choose to tap into private capital because they think it brings some disciplines to the project. So if you have a banker pouring over your project, the chances are that any little mistakes you made, any quirks, are going to be identified before you sign the contract, and you'll have dealt with those problems, which often cause the delays, before you get into the construction and the procurement. So there are benefits to involving private finance above and beyond just someone writing a check for you.
Looking at another issue, which I think we have seen leaps and bounds in terms of development, which is that of transparency here in our markets. Now, there's still some concern when it comes to governance, the accuracy of reporting, you know, from the construction and the property sector here. In your opinion, is this still something we need to be concerned about?
I think people investing in this market are going to take it very seriously. So I think anyone coming in, whether it's in a joint venture or any other form of public-private partnership, is going to want to be very clear what they're putting their money into and what the terms of the deal are. So I think transparency up front, but also transparency as these projects get progressed, is going to be very important. I mean, one of the things we identified here is that the projects actually have pretty good reporting mechanisms. So they report to their boards on a monthly basis, but nonetheless the delays are still going on. So something is going a little bit wrong in that cycle between reporting and outcome. And I think any investor is going to want to focus very hard on what is happening and making sure that they know, whether the investment they've made is safe and is going to deliver the outputs they think they bought into.